Okay, guys, welcome to another weekly market review session. Let's get straight into it. Okay, so very simply, we have come to the end of September. We are now officially in the start of October, final quarter four, Q4. Okay, final quarter until the end of the year. So let me show you some stats. So firstly, we are on my S&P 500 chart. Okay, you can see this very obvious channel. So from the end of the bear market all the way to where we are now, you can see very nicely, we have been moving in this channel, okay? Moving up, down, up, down, up, down, up, down for ourselves and very nicely moving in this channel. Okay, so very smooth so far. This has been since the end of the bear market. Currently, we are at the bottom of the channel. We are at the support level for ourselves. So a couple of things that I want to show you. Number one, okay, since 1985, you can see very simply, okay, the quarterly return since 1985, okay, the percentage of years within positive return. You can see Q4 tends to be a more positive quarter, all right? Majority of the time tends to be a more positive quarter, tends to make more returns towards the end of the year. Okay, so that's number one that I wanted to show you guys. Now, if we go into what do you call this, my S&P 500, okay, the years, okay, over here you can see S&P 500 performance went up year to date between 10 to 20% at the end of September. So again, we've rallied so much thus far, okay? If I draw from the end of the bear market here, all right, I just take my ruler and I start at the end here, all the way up, okay, to the highest point here is about 33.66%, okay? If I take it all the way up from here, okay, where we are here, 26.7%. So definitely more than 10 to 20% year to date, okay, at the end of September. So typically, when that happens, you can see majority of the years, okay, it ends up being bullish or even higher for itself. Okay, so let's take 2019 for example. Okay, year to date before September, it was up 18.7%. And then if you see very carefully over here, okay, let me circle again. Okay, 18.7% year to date. Okay, you can see in Q4, the rest of the 3 months, it went up another 8.5%. So the market went up a total of 18.7 plus 8.5%, that's about 27.2%. Okay, another example over here, 2021. Okay, market went up about 14.7% at the end of September, and the Q4 we had about 10.6%. So total about 25.3%. Okay, so why 2022 is not in here? Because there was a bear market for all of us. Okay, there was a bear market and the markets was just entirely going down. So does it mean that now, if you look at 2023, 12.8% at the end of September, does it mean that the same thing's going to happen to Q4? Okay. Honestly, I'm not a predictor of the future. Okay, I don't have a crystal ball. I can't tell for sure. You can see, all right, like in the recent times, 2009, 2012, despite it doing year to date at the end of September pretty decent, about 15%, 17%, it was still a negative for quarter four for 2012, and okay, for the month of October was about 2% for 2009. Okay, but statistically, probability wise, if you look at it, most of the time Q4, the third quarter of the year, tends to be more bullish or still bullish. Okay, so that is why I said for the short term, I may be bearish or maybe more choppy and volatile sideways. But if you ask me midterm, long term, what is midterm? Maybe for the next 3 months, long term for the next 6 months, 1 year, I am still bullish on the markets. Okay, so very, very simple. This is what I am seeing on the charts based on statistics. So if we look over here, okay, we come to the S&P 500, we can see very simply now we are at the bottom of the channel for the current price. All right. So now market is literally going on. It's about 12:38. Okay. And you can see that we are still at the bottom of the channel. We are still holding these levels. Okay. Now, if I remove all of this, okay, firstly, right, what can maybe cause the market to move down or move up for itself? I think Apple is going to be a very good indicator. Okay, so why Apple? Very simple. You can see, very simple with Apple, very clear, guys. Okay, very clear for the whole time. Okay, since the end of the bear market, start of this year, all the way till July, we have been moving up very, very, very steadily. Okay, very steadily. Now, what happens next? Okay, what happens next? Over here, we see a gap down, and coincidentally, this is around earnings period, and another movement down. Why is this movement down? Very simple. iPhone release news. Every time the new iPhone gets released, there tends to be some bearish or negative movement from the stock. Okay, whether iPhone sales are not good or iPhone did not impress. Okay, now if you look at the statistics over here, the seasonality for the past 23 years, 23 to 24 years, so since 1999, early 2000 till now, okay, you can see it right over here. Okay, early 2000. September typically is a bearish month for Apple. Okay, 38% or less. Okay, so you can see over here, very simple. Apple has been going down. Very, very clear cut. Okay, very, very clear cut. You can see the movement down from Apple. Now, typically what happens after that? The month of October is the best month for Apple. It is a rally. It is the best movement. All right, the best change, the best positive period for Apple. Okay, so again, can I predict for sure? I cannot, but based on seasonality, based on probability, based on statistics, this is what it has shown me. So for Apple, okay, based on seasonality, it tends to rally. If it does rally, we can expect S&P 500 to start making it waves and start making its movements up. Okay, so Apple is going to be a very key indicator for us. Now, if I go back to SPY, okay, and I draw my Fibonacci, okay, I draw my Fibonacci, I start from the top here, I go to the bottom, and then I bring it up all the way here. You can see very, very nicely, my price is at my 100% level. We've had a major pullback to the 100% level, okay? So where for myself, okay, where for myself am I seeing the price going? Well, to be very honest, okay, we've already hit the 100% level. We could expect a near-term pullback up, okay, to around the 50% level, which is about 439 to 440. Okay, that's where I expect. So about 439 to 440. That's where I expect, or where I think it can go to. So let me just draw this out. Right, somewhere around here, 439 to 440 level. Okay, now what gives me this inclination or this probability? Again, back to seasonality. Let's look at it. All right, you guys are familiar by equity clock from now on already, where I used to see the seasonality of the S&P 500. Fourth quarter, all right, Q4, more bullish. All right, very, very obvious. So that's why I tell you guys, midterm, long term, I'm still bullish on the markets, but for the short term, maybe more choppiness and volatility, a bit of sideways movement, maybe bearish as well. Okay, so this is the best if you are doing swing position trades for yourself. Best to accumulate shares, best to accumulate those positions, okay, while prices are cheap. If you are investing for the long term, again, also a fantastic time to add shares for yourself. Okay, and you can see what happens is towards the end of the year, the rally happens and we have a massive movement. Okay, so that's how it is for the S&P 500, and that's what I expect. Now, if I go to the hourly chart, okay, actually no, let me go to the daily chart first. Let me on my EMA 200. You can see very nicely prices are resting on my EMA 200. It went rejected, very clear. You can see the wick on this candle got rejected and pushed back up for itself. All right, push back up. So if I go to my 1 hour, okay, you can see even clearly bounce off here and push back up for itself. Now having a pullback down and may push back higher for itself. Okay, now if I also use the EMA 100, if I use the SMA 100, very simple. You can also see already went past my SMA 100 and all the way to my EMA 200. So this is our mighty level holding very strong. Okay, if we can continue for itself, we will have the bullish movement and bounce that we are hoping for. Okay, so again, for myself, like I said, just to recap, short term, volatile, bearish a bit, okay, maybe sideways. Best time for position trades, accumulating shares for yourself. Okay, if let's say prices break below my EMA 200, I will consider short positions. I will maybe consider shorting the market. Okay, if I look at my hourly chart, I think it's the same thing as well. If it can go past my EMA 200, further downside movement. Okay, so if I draw a support line for myself, I remove all my indicators. This is the level that I am looking at, around 422 for myself. Goes below that, short. If not, continue to accumulate shares for yourself for position trades and investments. Okay, swing trades, definitely not for yourself. Wait for a clear reversal in the market. For those who are doing day trades are still fine because we take each day as it comes for ourselves. Okay, so this is how markets are doing, and very simply what we can expect for the Q4 and October for ourselves. Okay, so that's it for this week's market review. As usual, guys, make sure you trade safe. Okay, trade properly. Remember what I just mentioned as well. Approach the markets with caution. Okay, and yep, that's about it. Okay, so take care, stay safe, and I will see you soon next week.